Hi, it's Brad with Ocean Consulting Services with the next in our videos relating to IRS collections. Today we'll be talking about the Statute of Limitations, what it is, and how it impacts tax collections by the IRS. Let's go over some highlights. IRS debt, is it forever? Short answer is no. The IRS, by law, has a 10-year period to collect, and that 10-year period is called the Statute of Limitations. It's a period of time to take legal action. It applies with many laws, not just tax law, but specific to tax law is a 10-year period that the IRS has to collect. Of course, with tax law, it's never that straightforward. Issues include, when does the period start? Are there events that can pause that period? And what if the statute of limitations is expiring? Are there any actions the IRS can take to continue to collect? Let's talk about some timing issues. The most basic is, when does the period begin? It begins on the assessment date, and if you've seen some of our previous videos, you'll know the assessment date is the date that the IRS records the tax liability. It's not the date you file, it's not the date the IRS receives your return, it's really when they enter the tax obligation into their records. That begins the 10-year period. Now there's a concept called tolling. What that means is the statute of limitations is paused for a period of time. And tolling events can include filing for bankruptcy, filing for what is called a collection due process hearing, when you disagree with their collection efforts and want to question the activities happening, filing for an offer in compromise, which we've discussed previously, and also while an installment agreement is pending. So some considerations. Any collection issue really begins with a question relating to the statute of limitations. If the statute has expired, in other words, the 10 years has gone by, then the IRS can't enforce the debt. So that's the most basic question: is the debt enforceable by the IRS? If the 10-year period has expired, then no, they can't enforce collection. Now, the statute of limitation can impact an offer in compromise eligibility. If you'll remember back to an offer in compromise, the basic requirement is that you don't have enough assets and income in order to pay the entire liability before the statute of limitations expires. So obviously the statute is an important consideration there. It can also impact installment agreements. Installment agreements do need to be paid before the expiration of the statute of limitations. So again, if you calculate what you can pay for an installment payment and it does not pay, then you wouldn't be entitled to a regular installment agreement. Now, another consideration is for taxpayers with real property, so typically a personal residence with equity, and the statute of limitations is coming close to expiring. So can the IRS take any action? Well, they can't directly take action, but they can refer your case to the Department of Justice, who can then sue and convert the lien on your home into a judgment and potentially collect. So it's one important caveat is if you do have real estate and the statute's coming close to expiring, the IRS does have another avenue to collect the tax. Another term used in the collection process is the CSED, C-S-E-D, which means Collection Statute Expiration Date. So this is the end of the 10-year period. How do you determine that? The way to make the determination as to when the CSED happens is to review your account transcript for the particular year. This is the official IRS record of your account. It will show the assessment date. It will also show any events that cause the expiration date to be extended, so any sort of tolling events. Are transcripts always completely accurate? Well, no. They're essentially accurate, but there are situations where they are inaccurate. The most frequent being when an installment agreement is being requested, and as mentioned earlier, pending installment agreements toll the statute of limitations. Well, if the installment agreement doesn't get accepted, for example, the IRS needs to go into their system and indicate that the statute should continue to run. However, if that doesn't happen, the IRS will mistakenly believe that the statute is tolling when in fact it may not. It's important to review your IRS transcripts, which anyone can order from the IRS, and determine if the statute has in fact expired or is still in effect. So quick conclusion and what's up next. Conclusion being that the SOL and the CSED, they're both key considerations in any debt collection alternatives. As mentioned, it could impact applicability of certain programs, or in fact the debt could no longer be enforceable. In summary, evaluation of those items are needed in any situation. Up next, we'll be talking about lien and their priorities. Thanks for joining us, and as always, feel free to reach out if you have any questions, comments, or need assistance. Thanks.